All right, today we're going to put one of America's biggest companies through one of the toughest tests imaginable. We're not just looking at a stock ticker here. We're basically grading a business, and we're using the playbook of the master himself, Warren Buffett. The company in the hot seat, Lennar Corp. So let's get right into it. So yeah, we're talking about Lennar Corporation, an absolute giant in the home building world. And the big question for this whole explainer is pretty simple, but the stakes are huge. Can one of America's biggest home builders actually pass Warren Buffett's ultimate investment test? Does it have what it takes to be a long-term winner? Let's find out. Okay, first things first. You know, Buffett's most famous rule is never invest in a business you can't understand. It sounds simple, right? But it's the first hurdle every company has to clear. So for Lennar, the question is, can we figure out what this company actually does without needing a PhD? Is it simple? And yeah. The answer is a resounding yes. It's actually kind of beautiful in its simplicity. Lennar is a home builder. That's it. I mean, look at this. About 96% of their money comes from building and selling homes. Those other little slivers, that's just stuff like financial services that help people buy those homes. It's a super straightforward business. So first test, passed. Easy. All right, so it's a simple business. Great. But that was the easy part. Now we get to the real heavy lifting. Is it a safe business? For Buffett, financial strength is everything. It's non-negotiable. So we're diving into the balance sheet. And honestly, this is where a lot of companies just fall apart. Okay, check out this number, 0.08. Now, that might not look like much, but it tells an absolutely incredible story. You see, less than a decade ago, this same number for Lennar was 0.85. Today, 0.08. That is a massive transformation. They've basically built a financial fortress, carrying almost no debt. Buffett's rule of thumb is to stay below 0.5. Lennar isn't just below it, they've crushed it. This is a huge, flashing green light. So you might be asking, how in the world did they pay down all that debt? Well, with this. $20 billion. That's how much free cash flow Lennar has cranked out over the last 10 years. That is just staggering. Free cash flow is the absolute lifeblood of any business. It's the money left over to grow, to pay down debt, to reward shareholders, all without having to go ask the bank for a loan. It's a beautiful thing. And what management does with all that extra cash, that's a huge tell. In Lennar's case, they have a massive $3.4 billion authorization to buy back their own stock. In the world of Buffett, this is just chef's kiss. It's one of the smartest things a company can do when they think their own stock is a bargain. It's basically the management team saying, we believe in this company so much, we're buying it ourselves. And when they do that, the remaining shareholders, well, we win right alongside them. Okay, so let's take a breath. The business is simple to understand. It's financially sound, like really sound. But here's the next question. Is it a truly great business? Is it a profit machine? Does it efficiently turn every dollar it has into more dollars? This is what we call the quality test. And when we look at a couple of Buffett's favorite report card metrics, Lennar is looking really, really good. Take return on equity, or ROE. That's just a fancy way of asking, how much profit does the company make with the money we, the shareholders, have invested? Well, Lennar averages about 16%, which sails right over Buffett's 15% benchmark. Same story for return on assets, or ROA. They're hitting 8%, showing that the management team is just really good at using the company's stuff, its land, its equipment, to make money. But, and there's always a but, right? Here's a little reality check. Buffett absolutely loves companies with these giant, unbreachable competitive advantages, what he calls a moat. You see that in their sky-high profit margins. Think about companies like Apple or Coca-Cola. They have margins over 40%. Now, Lennar's margins are pretty solid for a home builder, but they're not in that elite club. And that's not really a knock on Lennar. It's just the nature of the home building game. It's a tough, competitive business. Okay, we've put the business through its paces. We've looked at its simplicity, its financial strength, its profitability. So I think it's time, let's pull all this together and give the company itself a final grade before we get to the last and maybe most important piece of the puzzle, the price. So here it is, the final report card on the business. And honestly, it's pretty impressive. Financial safety? Big check. A cash-generating machine? Absolutely. High returns on capital? Yep. Check. Shareholder-friendly management? You bet. The only real warnings, the little yellow flags, are things that come with the territory. The profit margins are good, but not amazing because the industry is so competitive. And of course, its earnings are going to go up and down with the housing market. That's just a fact of life for a home builder. And that brings us to the final critical step. This is the ultimate Buffett principle, right? It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So we've established that Lennar is a pretty wonderful company. The question now is it trading at a fair price? Or better yet, is it on sale? Well, this chart pretty much says it all. The market, for the last 10 years, has consistently priced Lennar at a price-to-earnings ratio of around 9. Now, to put that in perspective, Buffett's general rule of thumb for a fair price is around 15. And the overall market, the S&P 500, that's usually over 20. So Lennar is trading at a deep discount to both. So you gotta ask, why so cheap? Well, the market is scared of that cyclicality we talked about. It's pricing in the risk of a housing downturn. And it seems that big discount didn't go unnoticed. In the second quarter of 2023, guess who revealed they had started buying shares in Lennar? Buffett's own company, Berkshire Hathaway. Now, it was a relatively small stake, but it's still a massive vote of confidence. It's a signal that someone on Buffett's team looked at this exact same picture and thought, you know what? That's a high-quality business trading at a price that's just too good to pass up. So this is where we land, with the fundamental dilemma that every investor has to wrestle with. All the evidence seems to show that Lennar is a really well-run, financially solid company. It checks most of the boxes on the Buffett checklist. And for years, it's been trading at a deep discount. So the final question, the one you have to answer for yourself, is this. Is that big discount enough to make up for the risks? Is the potential reward worth riding out the inevitable ups and downs of the housing cycle? Just a friendly reminder, of course, all this analysis is based on publicly available sources. This is for educational purposes only and is definitely not investment advice. Please be sure to do your own homework before making any investment decisions.